Sir, you're welcome.
Very much.
All right. And Mr. Gustav Boohene Asa is also a chartered accountant and a lecturer with the All Nations University. Thank you very much. You're welcome, Gustav.
Thank you.
I think we haven't met in a while.
Yes.
All right. I hope all is well.
All is well.
All right. Let me remind you that you're also watching this program live on our Facebook handle. It's Sunrise 106.7 FM. So thumbs up to the social media crew made up of Mr. Uswakwa and also Prince as well. And Nanasa is also helping out with social media this time around. All right, so let's get going. Let me start with you, Doc. I'm sure you followed everything the other time in Parliament as regards the budget presentation for the first quarter of the year, which has become a key component of election years. But what do you make of this particular one? Was there something you were expected to hear that you didn't? Was there something you were expecting to hear that actually came up? Is it something that will inure to building our economy, strengthening it going forward? What do you make of the budget presented by the finance minister in general?
All right. Thank you very much for your question. First of all, we have to understand that the government budget at this time is a constitutional requirement, as you have earlier on put across. And so we know that budget tells us how revenue will be raised and how revenue will be spent in various sectors of the economy. And there are two key components when it comes to a budget. We have the capital budget, and then we have the current budget or the recurrent expenditure. And so what the capital budget seeks to address is to look at the expenditure that is geared towards capital formation and financial assets with regards to yielding returns for the government in general. And whereas with this one we have elements such as infrastructure, example roads, schools, hospitals, industries, investment, etc. And then the current budget also looks at expenditures which occurs periodically. And so looking at this budget, you see that we have more of the expenditure covering recurrent expenditure. And so which is typical of the seasons or the times in which we are. And so based on the figures, as you will expect in the budget prepared ideally to sustain government expenditure for the first 3 months, it's not far-fetched to see about 90% of the overall 27 billion going into recurrent expenditure and debt services, whereas just about 3% is going into capital expenditure. So the budget looks more of consumption oriented as compared to investment oriented, and like I have just said, it is typical of a budget like this at this time round.
So you aren't surprised that it's more of expenditure, it's more of recurrent than maybe capital? I think it's normal.
Yeah, it's normal.
But I don't know if you remember, I'll come to you, Gustav, but I don't know if you remember maybe the budget figure for the same time last 4 years. Was it anywhere around the same figure?
Okay, I have heard commentaries from honorable members in the others, in the NDC, so to speak, say that it's around 10 billion, but I've not looked at the figures. But what I know for now is that the current budget is around 27 billion. Yeah.
Okay.
But the two years are
4 years apart.
Yeah, 4 years apart. Yeah, so we cannot compare in that manner.
Very well. Gustav, what would be your initial reaction to the amount requested by the finance minister and how it will be expended?
Okay, so I think maybe much should have been considered for capital budget. Okay, considering the fact that the fiscal deficit is too high, and then we are consuming all this money and we're going to borrow that difference over
I think the deficit is it about negative 12% or so.
the fiscal deficit for this one.
I mean, to GDP.
To GDP, okay, to GDP it will be around
11.1.
Okay.
Okay.
So that's
We
about
have it here.
12%.
Yeah, that's about 12%.
No, it wouldn't be up to 12%. That is, I think, it's 3%.
Rather.
Okay, so yeah, it's around 3% of GDP. But then when you take it from in the form of especially over the total revenue, then we are doing more than twice the revenue we are generating. So like, let's say you earn 5,000, but you decide to spend 10,000.
Wow.
So you imagine what will happen to you. This is a continuous. This is the nature of this is the structure of our budget. We are always doing the deficit, but the higher you see, because we are a developing economy, we need to spend more in order to boost the economy. But it's too much, then derails the economic indicators that will help the economy to thrive. Yeah.
Okay, so you were expecting to see some monies allocated to capital expenditure.
More of capital expenditure.
But don't you think that, as Doug Boohene mentioned earlier, this is the first quarter of the year, right after an election, and the expectation is that the government, be it the one in office now that will continue, a new government will take some time to possibly settle, appoint ministers before taking off. So maybe it's in place that, okay, for the first 3 months there isn't going to be any commitment into capital expenditure. Let's use it to take care of our workers, let's pay salaries, let's service our debt and all that. And then later on, when we are fully settled, then we look at the capital stuff. Or you think once there's been some sword cutting in the few weeks in the recent time, maybe there should be something of that sort to actually see to it that these projects are completed.
I would say yes, but then the problem is that our revenue mobilization is bad. Okay, so we raise little, okay, and then we spend all on consumption and expenditures, salaries, then servicing of interest. Then we go and take the government has asked for approval to go and raise $5 billion US, which will translate into over 30 billion Ghana cedis. Okay, so you see, we're always borrowing so much, but you see, borrowing, sometimes we say, oh, it depends on what you use it for. But in this case, we always borrow to consume the recurrent expenditure. That's what we're using the borrowing for. And then liability management. So that's my point, that I mean, it would be better, it would have do us more good for much of the money to be put into capital expenditure, because we need it more, because this will push us to develop faster.
Okay.
Yeah.
Right. Doc, from an expert point of view, do you think that this is something we should be worried about, especially given the fact that, okay, we are talking about just the budget for the first quarter, most of which is going into consumption and debt servicing, nothing really to stand the test of time. So what then do we expect in the full budget if this is just for the first 3 months and mainly for consumption and all? Is this something we should worry about, from what you said as an economist?
Okay, from where I sit, my answer will be yes and no. Yes, in terms of for the purpose of the budget, which is, as we have said, to enable government carry out its activities smoothly without challenges should there be a new government or otherwise post December 7th elections. And then no with regards to fiscal discipline. So ideally, one will expect that a growing economy as ours should by now, in worst case, be having a planned expenditure and expected expenditure being in equilibrium or in a state of balance. Okay. But what we
can
see,
you throw some light on that plan expected?
So planned expenditure has to do with what the government intends to spend on, and then expected revenue has to do with sources that government intends to find funds to finance those expenditures.
Okay, so you're actually talking about planned expenditure, expected revenue.
And expected
I was
revenue.
thinking you mentioned expected expenditure as well.
Okay, sorry. And so we expect that by now, as a growing economy, our planned expenditure should equate our expected revenue to be in equilibrium. But as you see from the figures, you realize that even with what has been presented to government, we still have a deficit of a little over 10 billion cedis as projected revenue. Stands at 13 billion cedis, and planned expenditure stands a little over 23 billion cedis. And so from the fiscal point of view, in terms of fiscal discipline, this will now lead to us weakening our fiscal structure, because on top of that we have to now go and borrow, and then as you borrow, you have to also look at financing your debt with regards to debt financing, or regards to coupon payment, etc. And then with regards to even paying the principal amount you have gone to borrow in the future. And so from where I sit, with regards to a no to the question you asked, it's rather going to worsen or weaken our fiscal structure.
Would you say we are broke, as some people are suggesting?
Okay, so I have heard commentaries from all over media suggesting that we are broke, but let's look at the data. From the analysis I have heard, they try to look at debt to GDP, percentage of debt to GDP. And so currently Ghana's debt to GDP ratio is around 68.3%, as compared to in 2016 December ending, which was around 72.5%. And so it is not about the debt to GDP, it's about how you are able to manage your debt on the long term. It will shock you to know that a country like US of A has a debt to GDP ratio of over 105%, according to World Economic Outlook. And also even a country like Japan has a debt to GDP ratio of over 235%. Even Canada has over 80%. And so it is not about your debt to GDP, it's about how well you are able to manage.
But don't you think the size of the economy equation comes to play, even the population, and how resilient the economy is? You're talking about the USA. They have a population of about 300 million thereabout, as against our 30 or so million. Shouldn't we factor all these things into considerations or calculations?
Yeah, so there are a lot of things that we should factor. Like you are saying, for instance, I know that in Ghana presently our gross domestic product is around 57 billion US dollars. Okay, and so if a percentage of that in regards to our debt is around 68, for me, from where I sit, we are not doing so bad. If you compare the statistics with other developed economies or advanced economies, we are not doing so bad. And let's look at Singapore. Singapore also, the economy of Singapore in some years back used to be just like that of Ghana. But presently, Singapore's debt percentage in regards to GDP is also a little over 95%.
Okay.
And so we are not doing so bad in regards to debt to GDP ratio.
Okay, very well. Before I come to you, Gustav, let me remind our listeners that you're listening to Event in Focus, our weekly current affairs program on 106.7 and on 102.1 FM of the Ghana Broadcasting Corporation. My name is Junwayne, and you're also watching this program live on our Facebook handle at Sunrise 106.7. You can also send us your messages via our WhatsApp or SMS line 020 2141 443 020 2141 41443 02021 41443. I've been talking to Dr. David Boohene, lecturer at the All Nations University. He's also the Eastern Regional Coordinator for the Institute of Chartered Economist of Ghana. And Mr. Gustav Ohene Asa is also a chartered accountant and a lecturer, also with the All Nations University. Gustav, the finance minister in his presentation made a statement, a categorical one, saying that Ghana's economy is stronger compared to what it was 4 years ago. Looking at the dynamics, the statistics and all that, can you say he was right in his assertion?
Okay, I would say in some parts. So not his statement is not entirely true. Okay, because we have a lot of economic indicators like the lending rates, inflation, which have really improved. Okay, our import cover.
Before you continue, can you outline some of the various key indicators that a nation is really doing well, that we are strong, to indicate that maybe the economy is strong, and then we are able to put things in perspective vis-a-vis the current state of affairs?
Okay, so some of the indicators, mainly the GDP, your GDP, then your ratio of your debt to your GDP. So the GDP, we are looking at the growth in GDP, how much you grow, your economy expand, and then what is your debt level to your GDP, and then we have other issues like lending rates. So if the rate is lower, it enables businesses to access loans to be able to expand or to operate. And then you have inflation. I mean, we all complain of a cost of living. Yeah, and inflation is a major factor of cost of living. And then the exchange rate.
Okay.
The exchange rate, which I think 2016 was a very big topic during the election. So somebody said he will lock the arrest the dollar. Okay.
The dollar.
Yeah.
Right?
So those are some of the things, some of the factors too. Yeah.
Good. So looking at these factors, GDP to debt ratio or debt to GDP ratio, our lending rate, the current inflationary level, and then the exchange rate. Would you say that comparing what's pertaining now to what pertained 4 years ago, we are better off and we are much stronger?
Yeah, we are better off.
Okay.
So,
in the
but
area,
I have exceptions. So
okay.
Yeah. So for example, in the area of revenue mobilization, okay, in the 2016, the then government was able to raise a revenue of up to 20% to the GDP. Okay, that means they are doing well in raising funds domestic through our taxes. But whilst the current government, as of now, did around 15%. Okay, ideally you should be able to do about 20%, especially with tax revenue. Okay. Because then it would reduce our borrowing. Okay. Yeah. So, and I believe there are a lot of avenues that the government can do, but maybe the political will is not there to do it.
Okay. For example, we talk about that when we get to measures and programs to help us
possibly
move on.
Okay.
Maybe we can just give us
throw a light on it. So, for example, remember there was a luxury vehicle tax. I was thinking that, you see, those that are able to, probably they didn't do the law work, so they probably should have been reviewed, because there are people who are really rich here, use expensive cars, which we could earn revenue from. But their willingness is not there, because it will end up coming to friends and family who have to be paying of the elite, and the elite don't want to pay the tax. We could have property tax. We are not making the most use of it, because people are buying lands over millions of dollars, properties and so on, but they are paying little on this property tax. When you go to the US, property tax is used for a lot of things. So I mean, if they says we are poor, it's not true. We could, because I think back in 2016, the then MPP running mate, said that we could raise a lot of funds so that we reduce our borrowing. But unfortunately, when MPP came, they're also borrowing. The borrowing, the size of the debt has doubled. Okay. Yeah.
All right. So relatively, things are better, and
Yes.
I think that supports the finance minister's statement
In some parts.
Okay.
So I wouldn't
Partially. Not entirely. Okay. Doc, I've been wondering about this. What is it about these economic parameters and indicators and the way you go about them that result in sometimes you hear people say, well, the statistics or the indicators are very positive, we are doing well, but we are not feeling it. What is it about how you go about the calculations, or at what level will it then be really felt by the ordinary people, or maybe are the people not being sincere sometimes?
Okay, so usually economists reason mainly from the macroeconomic level, but it is at the microeconomic level that we feel that individuals feel the impact. When I say individuals, the ordinary Ghanaian is able to feel the impact. So let me try to respond to the question you threw to my colleague here. You see that the indicators, we have the Ghana's inflation rate. I want to juxtapose what happened in December 2016 to what is happening currently. So with regards to the indicators, macroeconomic indicators, we have the Ghana inflation rate, the Ghana fiscal deficit, Ghana's public debt, the Ghana's gross reserves, Ghana's growth rate, and then of course GDP. Now when you look at December 2016, inflation rate then was 15.4%, and as at now, inflation rate as at October 2020 is 11.1%. Of course, we know the effect of COVID could have also led to that, as at around October 2019, the inflation rate was around 7.7%. So when you look at fiscal deficit, as at December 2016, we had our fiscal deficit being 6.3% of GDP in 2015, and then it came down to 8.7 somewhere around December 2016. Presently, our fiscal deficit is around 11.4%. So you see that throughout the various macroeconomic indicators, it favors well presently, but the issue has to do with the impact at the micro level.
Okay.
The impact at the micro level. How are we able to translate all these successes into ensuring the desired socio-economic status of most Ghanaians? And so maybe we have to look at our politicians will have to look at how to channel these gains to the ground level, so that once they say all those big things, we'll be able to feel it in our pockets. Because presently most institutions, especially private educational institutions, are not able to even pay their workers. Although we are aware of the Care Ghana project, which is supposed to bring about some sustenance with regards to the economy from July to December and all that. There's a projection of over 100 billion investment to ensure that the effects of COVID is controlled. Yet still, about 7 months down the lane, we still have some individuals in terms of enterprises not able to pay their workers. We know for sure that some are hiding behind the effect of COVID, even though they can pay. They decide to pay, they decide not to pay. But ideally, some are genuinely not able to pay. And once you are not able to pay, it means that income levels will also go down. And once income levels goes down, it means that purchasing power of the ordinary Ghanaian will also go down. And remember, consumption, which is tied to income levels, is also in a way linked to aggregate demand, which also goes a long way to grow our economy in terms of economic growth rates. And so when we have low income levels prevailing, purchasing power going down, individuals, although you may have favorable macroeconomic indicators, on the ground level, you don't feel the impact.
But that has been the situation over the years. I mean, generally, if you compare salary or wage levels to that of some other countries, developed countries, you realize that we are nowhere closer to them, and it's been like that. So how can we possibly address this? Because trying to also raise the wages or something of that sort would also end up ballooning our national debt, because we are realizing less than we really need to spend in terms of revenue. So how do you reconcile these two?
Okay, so that's why I'm emphasizing more on revenue generation. I think the government are being lazy. They always mostly they want to use the indirect tax to introduce a lot of like the communication tax,
using the backdoor approach.
Yeah, using all those ones to collect a lot of tax, which the poor suffer the most. Okay, I mean they don't want the tax that would affect them, but they rather would do the one that affect the poor the most. So we are always, the gap is keep on widening. The rich keep on getting rich and the poor
getting poorer. So you're saying that if we are able to widen the tax net to get raking more revenue from tax, then we can also attend to the wages, and then possibly people will be more emboldened to spend more for the economy to grow.
Yeah, even with that, I think looking at the budget, the compensation of employees alone takes over 32%. Okay, so the thing is that I like the policy of creating a level environment for private sector to thrive. In that case, it will lessen the burden on the government to be employing almost everybody.
Exactly.
Yeah.
And would you say redundancy in the public sector could also be a factor? Redundancy.
Yeah.
All right, let's make progress. Let's move on. There was also the promise to establish a national development bank. I don't know what your comment will be on that. During his presentation, the finance minister actually touched on that.
Okay. So I think this has been a promise. I heard they wanted to merge NIB and ADB initially, but later I think they decided to keep them. But then I hope the story of this one does not become like that of ADB, that the mandate was to help develop agriculture, but as an agriculture is still not well developed, because ADB is focused more on other banking areas than financing agriculture.
Okay,
so that is a good idea.
Okay, so he was saying that this particular one would enable, will be globally rated so that it can leverage foreign private capital for industrial and agricultural development in the country. Foreign private capital, what does that mean? Okay, so foreign private capital means individual, like people who have equity or companies that want to invest in other businesses. Maybe they are foreign, but then they're able to raise funds, and then they will identify good business opportunities and invest in. So those are like companies who are there who are looking for places. So they also want to invest. Probably they have money, they want it somewhere they could put the money, so the money will work, and then they will get a returns. So it could either be a debt or an equity form. Okay.
So the money can come to the bank as a debt, they will borrow, and then it will turn around and they will pay back, or they can also invest in. So something like that.
Okay. And Doc, you touched on COVID-19.
Okay.
You said it's been one of our beings this year. Would you say that the outlook could have been much better minus COVID-19?
Yes, of course. When you look at the data, somewhere the first quarter of this year, you will see that in the finance minister's budget, you don't see any allocation for COVID-19 management. But in the mid-year review, you see to the tune of a little over 11 billion cedis, and that is also a component of recurrent expenditure. In the sense that you are not going to get direct returns in terms of capital formation or in terms of increase in financial assets, and so ideally that has also affected our fiscal structure. We remember somewhere in April, the IMF approved a loan facility for the country to enable it to be able to manage the crisis. And so this 11 billion is also a loan facility adding up to the revenue envelope of the fiscal structure. It is adding up to the expenditure envelope of the fiscal structure, increasing it and thereby worsening our already fiscal deficit that we have as a country. And so yes, the effects of COVID-19 has greatly impacted our fiscal structure.
What Event in Focus is a program transmitting on 106.7 and on 102.1 FM. At this point, we shall activate our phone lines for you to come through with your contributions. And afterwards, we shall be looking at measures and programs that our panelists would recommend or propose to the government to help build a resilient economy going forward. The numbers to call are 059-3142-489, 059-3142-489, or 03621-94636, 03621-94636, 059-3142-489, 03621-94636. Hello, good afternoon. Sorry, you can hang up and give us a call again. 059-3142-489, 03621-94636. This is Event in Focus. We're discussing the first quarter for the year 2021 budget presented before Parliament last week by the Honorable Finance Minister Ken Oforiatta, asking for about 27.4 billion to be spent between January and March, right? So that the full budget for 2020 will be presented in March. And as my panelists have been touching on, or as they've been explaining, most of these this money will go into recurrent expenditure, debt service, compensation of public sector employees, activities of key government agencies before the drawing of a full budget. And a total amount of about 3.77 billion will be spent on arrears, clearance and debt amortization. We shall talk about that, but let's go to the phone lines. Hello, good afternoon. Oh no, I'm afraid we seem to be having difficulties with the line, but you can still keep trying. I believe we go through. Let's look at the 3.77 billion. Would you say that is way too much for just arrears clearance?
Okay, so we have
okay, please hold on for me. Hello, good afternoon. Please, what's your name? Where are you calling us from?
Yeah, this is Axel calling from
Anton, where are you calling from?
Yeah, I'm calling from them.
Okay, please go ahead.
I think that the finance minister is right, saying that today's economy is better than the previous administration economy. Why am I saying this? In the year 2016, somewhere 2015, 2014, the old government said that.
Oh, but you can stay on the line. You can try again so you can continue making your point. Hello, good afternoon. Sorry. 0593142489 036219466. Doc, you're trying to explain something that's about the 3.77 billion to be spent on arrears clearance.
Okay, so we have two major components in the budget in terms of expenditure that is going to settle debts. We have that of interest payments, and then we have that of amortization. That is about a little over 3 billion. So
what
when
is
you
that?
sum amortization, so that has to do with paying the principal amount you went to borrow.
Okay.
And then the interest payment has to do with the interest that is charged, maybe on a year or till you pay the principal amount. Yeah. Okay. And so when you sum,
Doc, just a minute. Hello, good afternoon. Oh no. Please go ahead.
So when you sum the two elements, interest payments and loan amortization, you are heading towards a little over 10 billion, which is about 34%. Which is about 34%.
That's even 10.4.
Okay, 10.4 of the.
No, 10.4 billion.
10.4 billion. But in terms of percentage, that would be around
percentage, that is 38.
Okay.
38% of the total appropriation.
Appropriation, okay. Yeah. And so it's not as it's it looks scary, but on the face value, we want to look at it just as it is. All right. And earlier on, you were asking my colleague about programs to programs you will recommend or propose for government to help build a resilient economy.
Yes.
First of all, in simple terms, we have to maintain fiscal discipline, moving forward to increase pace to promote economic development. So what do we mean by maintaining fiscal discipline? We know we have a fiscal responsibility threshold of 5% of GDP.
Have you gone beyond
Currently, we are at 11
way beyond that.
We are beyond that, 11 point something percent.
So we're not being fiscally disciplined.
Yeah, we are not being fiscally disciplined. And so we have to look at that.
Okay, let's try this last call and see. Hello, good afternoon. Good afternoon. Please go ahead.
Okay. And the next thing, we have to also create and sustain a low risk destination for businesses, not only for foreigners but also for locals. So we can look at the element of sustaining our democracy. We can also look at providing more tax incentives and enabling environment for locals, not only foreigners or multinationals, as I believe this will create an opportunity to balance our payments and increase exports through
Doctor, please just hold on briefly for me. Hello, good afternoon. Hello, good afternoon. Oh. Okay. Sorry about that.
Yeah. The third point is that we have to check corruption to seal the linkages and the slippages that weakens our revenue envelope in terms of our fiscal structure. So by this I mean that institutions responsible for checking corruption in the country should be up and doing. You recall recently that Azuri Manasseh and that of the CEO of PPA. Yeah. I to my understanding, or from commentary that I've come across, he could not explain 14 billion cedis that was between 2017 and 2000 that landed into his account. Now imagine what this money could have done, and this is just one aspect of the many that go without we seeing it. And so institutions that are mandated to check these things should be up and doing. They shouldn't leave the job for our journalists to be doing it.
Okay.
Yeah. Thank you.
And afterwards become victims of attacks.
Yeah.
Anyway, all right, Gustav.
Well, in Ghana, we have a lot of unexplained wealth, and nobody
Okay,
seems to.
please let's try this one. It seems like we're having challenges here. Hello, good afternoon. Please, your name and where you're calling us from. Your Akilu, please make it snappy.
Or not, the way they read it, I like it. But my problem is, after the election and you are down, maybe you lose election, then you try to increase salary, you cut short, you make promises. That is my problem. That is why I'm not happy with that. I thank you very much for your good work, for the good work you are doing. Thank you very much.
Thank you very much, Akilu, for your contribution. Gustav, you take it from there.
Okay, so as I said, there are a lot of unexplained wealth. A lot of people are mass wealth, but Ghana here, we just ignore them. We just look at them and then they just pass by. So the special prosecutor should be up and doing.
Gustav, please. Okay, sorry, go on. I'm afraid we are unable to pick any more calls again because we are hard pressed for time. We have just about 5 minutes more to go. So please go ahead.
So my recommendation to the government, you see, we need a lot of fiscal space to be able to implement a lot of capital infrastructures. So I think one of the things is that we are borrowing at a very high interest rate. That one to need to be looked at. And I think if your fundamentals are not strong, obviously then you can't get a good rate at the market.
Okay.
But then, as I already said, if we try our best to raise more revenue, then we can reduce the debt part of it so that it will come down a bit. So for example, I've said that I believe we can do more because our other countries in the same middle income countries are doing more than 20% tax revenue. Okay, of GDP. Okay, so we can do that. They just need the will to do that. So that there are a lot of places. For example, I said that property tax. I'm challenging government that property tax is somewhere they can get a lot of money. So they should get the courage. And those who have property, the value of their property are so. When you go to East Legon and some areas, when they mention the value of the property, so if we are even just doing 2% per annum, you pay property tax, and we are serious about it, we could get some big sum of money from that place. And a lot of the government need to be innovative and make sure he bring tax policies or tax that will help the economy. Okay, not the ones that is only taxing only the few in the formal sector. There are people in the informal sector, they are making a lot of money. But because the government just want the lazy approach, they only concentrate on where it is that easy for them to collect the tax. So
okay,
these are some of the things.
But before you go, do you think we are on the verge of possibly considering another HEPIC initiative?
No,
we aren't. Okay, so what would be your final comment in just about 30 seconds each? Gustav.
Okay, so you see, with regard to the HEPIC it was something that a country goes into only once. What probably could be that we might have to go to IMF for policy credibility.
Once in a lifetime?
The HEPIC?
Yes.
It was a once in a lifetime thing, so you don't go back to HEPIC again.
Okay.
So, but as it is now, I think we can do it, but they should reduce the fiscal deficit. I mean, we can't continue to be doing above. That is why they made a law.
So would
The
you say
Financial Management Act that we should do
HIPIC has
like
really been beneficial to us? If after HIPIC, after we've gotten some of our debt forgiving and all that, if we would come back to this stage, would you say we made good use of it?
As in, we made it was good thing, and we were able to get some infrastructures from that, and also having your debt forgiving, starting on a clean sheet. We hope we get the same thing again, but we can't get that again.
Look,
well, let me add that HIPIC is a debt relief service. It doesn't necessarily mean that your entire debt will be scrapped off. What it means is that once you ascribe yourself to HIPIC, what it means is that the interest rate that you'll be paying on the principal that you already owe will be scrapped off, but your debt stock still remains.
The principal.
What is scrapped off enables you to have the space to be able to embark upon poverty reduction strategies and to also implement it.
Mm-hmm.
Yeah. Okay, so that's just about. I wanted to comment on the National Development Bank. I would have preferred for a business development bank as compared to a national development bank, because we already have 2 national development banks, and they are mandated to do a specific thing. And so to go and then create another development bank, although we know that this development bank is going to add up to the capital expenditure space, which is very good and very commendable. Okay. But it's just like doing the same thing over again. And so institutions that are mandated to check that financial institutions do what they were established
to be up and doing. Yeah. Thank you very much, Doc. We rest our case here. Thank you. And